And now we've seen this this macro move, right? Where it seems like potentially the softs have all kind of moved in tandem, and I guess it's
played out.
Like you said, yeah. Yeah, it looks to be at this point, right? Well, that was my next question: is where are we going from there? So I think you think that trade is over then.
Well, it should be. I mean, the reality is it was a bubble that was, as I said in my lead on that article, was a bubble ready to burst. And I think it did last week. And a lot of that move was started because the dollar was wobbling, and then you had all the talk about the dollar is going to crash, the dollar is going to be worthless, fiat, it's fiat currency to begin with, and we're going to have like the 1930s depression era. Gold was going through the roof. So
you mentioned a couple of trends you've seen over the years. How has the macro picture changed in terms of people in the coffee industry having to understand the macro picture?
There's something about that also in terms of market imbalances, and we'll study the COT report and look at it, and everyone always says, oh, look what the specs are doing. Yeah. But if you put the spec position against the commercial position, I mean, I tend to say, I'd rather look at what the commercials are doing, because theoretically the commercials are supposed to know more. And, normally the commercials are taking the opposite side. And so, when the market's sort of at that balance, that equilibrium point where both positions were low, we had that conversation a bunch of weeks ago, where it could have gone either way. And there were instances where the specs, bullied it up, or the specs bullied it down. And what did the commercial players do? And so that's what I tend to look at. And I would say that's important, and to understand that, because in my commodities lifetime, I think when I started, total world production was 75 million bags, and now add another 100 million on top of that. And so there's a lot of coffee that has to be hedged.
Yeah, now that's just Brazil, right?
Right. So that'll next year's number, right? So there's a lot of coffee that has to be hedged, and therefore there has to be that many more speculative positions or fund positions in the market. Otherwise, E.D.F. Mann and everyone else wouldn't be able to have the liquidity to operate commercial business effectively.
I guess what I'm getting at, and maybe it was a leading question, Judy, is that, one of the complaints I hear a lot, and I think this is usually from people whose fundamental analysis is proved wrong by price, is, oh, well, the fundamentals were correct, but the funds were moving it, or there was macro things that outside my control. So how much do you think the market needs to get back to, I would think that the market is kind of like a rubber band, where it's got to come back to fundamentals at some point.
It does, but the market never moved away from fundamentals. So even if you don't agree with what the market is doing, there's something that maybe you're missing. And that there's something, the market, if you're sitting in one spot and you're not hearing and understanding the full picture, well, the market might not do what you think. And I mean, I was bearish on the market. The market had its run up, acknowledged what the run up was about. That is a fundamental. But I also then said, how far is this going to be able to be stretched on this tight move? And was able to feel pretty sure that, it was going to run its course. But the market had to make some sort of move. And the reason why markets move as they do sometimes pretty quickly is because there is some sort of fundamental correction or adjustment that needs to be made. So, It helped to weaken differentials. It helped to restore some sort of parity into the market. It gave producers a gift to be able to sell into.
Absolutely.
Okay, so sell 2 years crops or whatever it may be, and put some put spreads on and take advantage of the move.